Good morning. I am M.Nalini, Assistant Professor, PG and Research Department of Commerce, K.S.Rangasamy College of Arts and Sciences. Today we are discussed about the gross total income and total income. What is gross total income? So 5 heads of income is to be added, we get a gross total income. That is income from salary, income from house property, then income from business or profession, then income from capital gain and income from other sources. Added, we get a gross total income. Next, what is total income? That is a gross total income less deduction under section 80C, we get a total income. Then what is deduction under section 80 means? These are the deductions. First, 80C, if a individual invest or paid any insurance premium or fees student, then we deduct the amount 80C, that is 1,50,000. Then next one the pathinga appadina 80CCD, that is a national pension scheme. If the individual invest any amount as a national pension scheme, you have deduct the amount rupees 50,000. Next, deduction under section 80DD, that means the expenses of disabled dependent. If the disabled is 40%, the amount of deduction is 75,000. If a disabled is 80%, the amount is 1,25,000. Next, deduction under section 80U, that means the individual is a physically disability. That means 40% means the amount rupees 75,000 is deducted. The severe, that means 80% disability means rupees 1,25,000 is to be deducted. Then deduction under section 80 TTA, it's a below 60 years. If the individual is below 60 years, the deduction is to be claimed. That is a interest on savings. Rupees 10,000 is to be deducted as a deductions. Then 80 TTB, that is a senior citizen. Okay, senior citizen, the interest on savings account rupees 50,000 is claimed as a deduction under section 80 TTB. Next important deduction is 80G. Okay, if the amount is 50% of donation or 10% of total income, whichever is higher is to be taken as a deduction of 80G. Next, deduction under section 80GG, that means a rent paid deduction. How to calculate? Rent paid minus 10% of adjusted total income, then rupees 5,000 per month, then 25% of the adjusted total income, whichever is less is to be taken as a deduction. Next, deduction under section 80D, it's a assessee pay a health insurance policy. Okay, so below 60 years, normal individual claim a rupees 25,000. If the individual is a senior citizen, claim a 50,000 as a deduction under section 80D. Next, 80E is an interest on loan taken for higher education of spouse, children or student. Okay, actual amount paid as a deductions. Next, deduction under section 80EE, that means a housing loan interest. Okay, if the loan sanctioned the financial 2016 to 17, the actual amount are rupees 50,000, whichever is less is taken as a deduction. Next, 80DDB, that is a medical treatment of individual dependent, that is rupees 40,000 as a deduction or rupees 1 lakh is deduction for a senior citizen. 80CCD also taken as a deduction for national pension scheme. Next, both the deduction 80C, 80CCC and 80CCD is applicable deduction is rupees 1,50,000 only. If an individual gross total income less than 5 lakh means the individual has claim a deduction under section 87A. How amount is to be deducted? How much amount is to be deducted means total tax paid or rupees 12,500, whichever is less is to be claimed as a rebate under section 87A. Slab rate for deduction, slab rate for tax liability. That means senior citizen below the individual below 60 years, the slab rate up to 2,50,000 nil, then 2,50,000 to 5 lakh 5%, then 5 lakh to 10 lakh 20%, then more than 10 lakh 30%. If an individual is a senior citizen, means up to 3 lakh the tax is nil, 3 lakh to 5 lakh 5%, 5 lakh to 10 lakh 20%, then above 10 lakh 30%. If the citizen is super senior, if the individual is super senior, means up to 5 lakh nil, 5 lakh to 10 lakh 20%, above 10 lakh 30%. Next class we are discussed about how to calculate the tax. Okay, thank you.